As we close out our week in San Francisco, I want to check in on one more household name that calls the Bay Area home, and it's Clorox. The last couple months, rough for this iconic consumer products company. Last month, Clorox lowered its full-year forecast at an analyst event. Then a few weeks later, they reported what was widely considered to be a disappointing quarter. Culprit? Companies facing intense competition from bargain brands, private label, while it deals with some business lines that frankly have slowed or even become saturated. In response, the stock's fallen from 166 over the summer to 146 today, where it has a 2.9% yield. So we have to ask ourselves, has Clorox been punished enough? Let's take a closer look with Benno Dorer, the chairman and CEO of Clorox, who just celebrated 5 years at the helm, to get a better read on where his company's headed. Mr. Dorer, welcome back to Mad Money. Benno, you've done a remarkable job, but you started this most recent call with, we are not satisfied with our top-line results. You've never ducked any question. Tell us how you're going to get things moving again from the top line.
Yeah, so Q1 was not our strongest quarter, right, clearly, as we're managing through challenges on two businesses. But what we're saying is that we're still on track with our fiscal year objectives, and that we're projecting growth that is more the type of growth that you used from us and that we expect from ourselves in the back half. The key to getting that growth is innovation. We have a very strong set of innovations across most of the portfolio in the back half, and that's how we'll bring growth back.
Okay, now you just say, listen, it really comes down to coal and trash. Explain that to people, because if you can fix coal and trash, if you can fix bags, if you can fix charcoal, I think that we would see a different company a year from now.
Yeah, that's correct. So, you know, two businesses that have been struggling. We're seeing a lot of strength. 3 out of the 4 segments are growing margin, are growing volume. But Coal and Glad are 2 businesses in our household segments that haven't done as well. Why is that? We're seeing some distribution losses post-pricing. Okay. We've taken price increases, and retailers didn't necessarily like it, and competitors didn't consistently follow. And that's created weakness in the business that we're addressing. How are we addressing it? We're lowering the price gaps towards competition. That's been working on Glad. We're seeing Glad pick up. And
green shoots on Glad.
Green shoots on Glad. And we're putting better business plans in place on Kingsford for the 2020 grilling season. Kingsford's now growing again in consumption. And then, like I said, we're going to back it up with innovation on both businesses in the back half. Both businesses fundamentally are very solid. They deliver superior value to consumers. They are backed by strong innovation, and they're generally loved, which is why they're the market leaders in their category. So we're confident we're going to get those back.
I mean, sometimes I think that you've got brands, when we talk about Burt's Bees, this is, I think, one of the fastest growing, particularly among millennials, because of the labels. Do you need some of these other businesses? Because you've got some businesses that are so on fire that I kind of want to own those businesses.
We love our portfolio, and, you know, having a diverse portfolio is a strength. And I will tell you that there's always 1 or 2 businesses. We're in 13 major categories that aren't doing less well. And right now, it's Kingsford and Glad. Last year was Brita. 2 years it was Litter. But we know how to turn those businesses around. Burt's Bees, in particular, has been on a tear for a long time. 19 consecutive quarters of share growth. Grew double digits last quarter. And it's one of those businesses where we're applying the Clorox innovation engine very effectively. And we have a lot of innovation coming out, if I may just point
please.
At one of them. This is something I'm really excited about. This is our Renewal line. Retinol is a very hot ingredient, but retinol is harsh and retinol is synthetic. We have in this line a natural alternative to retinol without the harshness, and it works as well. So this is one that we love. And then, of course, you know, this is hemp, a new line that has hemp seed oil that is known for its hydration qualities. And we have a body lotion, we have a lip balm, and we will have a hand cream. And we think that that's a very on-trend and natural extension to our Burt's Bees line. So we expect a lot of growth to keep coming out on Burt's Bees. Will you
advertise online for those? I mean, I think that's a Facebook, Google, Amazon kind of thing. I'd like to see that.
It is. You know, one of the things we're saying is that we're devoting ourselves to purpose-driven brands that we're going to market in a personalized way. So marketing online is something that we know very well. We're the only company, I think, in our space that spends the majority of their advertising and sales promotion dollars online. Last fiscal year, 55%. The ROIs is what drives that. We're getting particularly good returns, and Burt's Bees is one where consumers are online, so we're following there.
I'm seeing something here, compostable wipes. Wipes have been an unbelievable category. You're the only company I know that actually, you better do ESG as an exec. It's part of your compensation. Is that what's driving these kinds of things? Is you've got people thinking, listen, in order to be able to move up in Clorox, I have to do something good for the environment.
We think that doing something good for the planet is also good for business, which is why with our new strategy, Ignite, which leads us through 2025 and which we've just kicked off last month, we're going to make a double down effort on sustainability. And this is the first one out. We've made a very bold goal that we want to reduce the virgin plastic and fiber that we use in our products and packaging by 50% over the next 10 years. And compostable wipes is one that consumers love. 65% of consumers want a compostable wipe.
Absolutely.
More than 60% of consumers want a better alternative that is more sustainable than wipes. And this is the very first wipe that's being introduced right now, and we're excited about the initial reaction that we get from retailers. Disinfecting wipes is a very important business for us.
Fabulous business,
it is a fabulous business. It's the fastest growing business in home care. We are the market leader, and we're nurturing it with innovation like this.
Last question. Will we, because I'm somewhat nervous to say this, but you got that you're down back yielding at 3%, okay? Because the stocks come down. But your dividend has been remarkable. You keep raising and raising. I know it's up to the board, but should we expect that to continue even if two business lines have been troubled?
Yes, absolutely. We have increased our dividends every year since 1977, and we expect that to continue. That's something that our investors expect from us. We deliver very strong cash flow, and we put that cash flow to work either by investing in the business or by returning it to shareholders. And the dividend, of course, is a very attractive way of doing so.
And that's why you have the best total shareholder return, and why I believed in you from day one.
Thank
you. Been every decline in the stock price has been the opportunity to buy, and this one's no different. That's Benno Dorer, Chairman and CEO of Clorox. New products, fixing these categories. It's going to work. Man Bunny's back here for the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.